Joining us now with $225 billion in assets under management, Creative Planning President and CEO Peter Mallouk, and Value Engine Capital Management Portfolio Manager Jordan Kimmel. It's great to have you both here. Jordan, to you first, your instant reaction to these comments from the White House that they will use the Defense Production Act to increase production. You like the oil services sector.
Well, the oil service sector has been, on fire, and so the oil stocks. And we also know they're public enemy number one to the administration. So they want to jaw up on them and do anything they could do to kind of put a bad mark on somebody else who created this problem, and the problem being inflation. And frankly, it was the oil companies that did this. It was some policies. And frankly, Cheryl, it's a tough time for the country. It's nice to see a bounce, but, we've been in a bear market for a while now. We are basically already, I think, in a recession. And that's not the worst thing in the world. So as long as you were prepared for it, and good valuations are already showing up, but they have to blame somebody, and they certainly don't want to point the finger at themselves.
Well, but they've got to do something because the midterms are coming up, and I think that's kind of creeping into the conversation. Peter, to you, how are you advising your clients right now as we go into a higher interest rate environment?
I look at what's sustainable and what's not sustainable. So if we look at energy, I agree that we're looking for somebody to blame here. But if you look at over the long run, there's not really a great macroeconomic story for energy. It turns out that we have, with technology, been able to find more than we thought we could find. We've been able to reach oil that we didn't realize we could reach before, and we're rotating away from it with cars and planes and everything else faster than we thought. So when you see these spikes in energy, they're usually not sustainable. They're due to geopolitical issues, and they have been short-term in nature, and hopefully that's going to be the case there. So I don't see going into energy, looking at how it's done this year and saying, hey, let's really put a lot of my eggs in that basket. I would not advise clients to do that at this time. If you look at other asset classes, like if you're looking at being retired for 20, 30 years, it might be a little upsetting to watch your bond portfolio down a little bit here, but in the long run, this is great news. I mean, if you went to a bank and you bought a bunch of 2-3% CDs and they put up a sign saying CDs are now paying 4, 5, and 6, you would not be upset because when your CDs mature, you're going to go get higher rates. The math has not really worked for people that rely on their portfolios for a long time, and they might get an opportunity, maybe here in the future, to stretch out their duration and lock in some higher rates.
All right. Well, you know what? Look, again, the banks are going to do well. Hopefully, savers will do a little bit as well. Jordan Kimmel, Peter Mallouk, what a day. Thank you for joining me. We are up 303 on the Dow. The Dow and the S&P snapping a 5-day losing streak again. The Fed did it, 75 basis points. That was the hike. We thought it would be 50, 75 it was. We'll see what happens tomorrow when markets open once again. That's it for Claimant Countdown.